Can you hear me? Are you able to hear me on the audio? Bear with me, I haven't done this in a while. Can you see that? There's a long delay in the audio. Okay, this is the homework screen, and this was today on the British pound. So what you see is the green lines, the green dash lines are weekly levels, and we'll go into how to find those. This is all ICT's work, ICT Inner Circle Trader. He has a YouTube channel, and he also has a website, the Inner Circle Trader Tutorials, which teaches all this stuff. And this is sort of my slant on it. I don't charge any money for it, and it's it's a little bit involved, but once your eyes start getting used to seeing things, that's the key, is the get the opportunity to get your brain and eyes at real time to see what you see in hindsight. And that's the key to all this stuff, is being able to see it in real time. The other lines here that you see, this line is a daily high or daily low, and those are in yellow. And then we also have green lines, which are also weekly highs and weekly lows. And you'll see that one of those came into play today. So yesterday's daily low created this little spot right here, and that's the spot that was interesting as a short today in cable. Cable is the British pound USD, and it's just a nickname that was given to it because of the cable that ran under the ocean that linked the US banks and British banks back in old times. So if we go out and go to, this is a 15-minute, I look at the British pound, the euro, the dollar, and then I look at the euro British pound. So if you want to see that, that's my radar screen on the 15-minute. So what you got here is you've got the euro British pound on this line, and it's watching the euro against the British pound, and you can see it was definitely an up day. So whatever this one's doing, it'll usually be inverse. You can see the British pound US dollar going down on this same day. Then you look over to the euro US dollar, and you see more choppiness, and that choppiness is these two guys allowing them to do their move in the market that they need to do. You see the dollar over on this panel, and it's choppy as well. So basically what's happening is the dollar and euro aren't doing that much, but the British pound and euro British pound are duking it out. So that's what your eyes got to get used to. You look at it, you see it, especially live, and you start to see a correlation. This is the one thing we don't have in futures. We don't have these correlations to where you can look at one thing and it's giving you the answers to the other. Sometimes you get a little divergence. Sometimes you get little areas where one moves before the other, and those are subtle clues that you get on the 15-minute. Are you still hearing me? Type in Hangouts if you're hearing me. So there's a long delay what I'm hearing and seeing here, so I'm getting rid of the headphones so that it doesn't mess me up. But This is the homework screen, and what the boxes are, those are the what's called the central bank dealer range. The red box in the center is from 3 o'clock Eastern Time to midnight. And what happens with that is it gives a basically a standard deviation for the possible range of the day. Doesn't always happen, but it does happen a lot to where you can depend on it. This is the red box in the center is that central bank dealer's range. And what that means is it's sort of a range that is kept within the banks for the off time. And a lot of that's Asia before Europe cranks up at 2 o'clock in the morning Eastern Time. All the times I'm giving you are Eastern because New York is still the driver. The U.S. dollar is still the driver of all the currencies, even the ones that aren't paired with the U.S. dollar. So what this does is it gives you a inverse relation to the dollar. If the dollar is in front of the Japanese yen, that's called dollar yen, and so you'll see the yen at the back side and the dollar at the front side. What I trade is the British pound dollar, which is the pound against the dollar. So if the dollar is strong for the day, you should see a decline in the British pound, especially in the euro. Those two are hooked at the hip with the euro dollar. And then you have the British pound against the euro, which is EUR/GPD. This is the Thinkorswim platform. And what it does is it gives you really good information of what you're looking at as far as levels. You can go back 20 years on this. This is plotting the bid. It doesn't plot the last, so it's actually giving you the opportunity to see the bid. So let's go out on a weekly chart. What I'm doing is just getting rid of those daily highs and lows so that it's easier to see. We'll get rid of all the lines for right now. Yes, the spread is. Am I talking to Bob or am I talking to Sandra? Yes, the spread is good on Thinkorswim. The only trouble I've been having with it is during like the big feds, uh, non-farm payrolls. Seems to be those big events are really starting to make the trade ladder or dome really slow and non-responsive. That's the only complaint that I'm having is during those times. There's a real long delay on this broadcast. There's no way to teach this all in one day. I'm just giving you highlights of what you can look for when you go to ICT's videos on YouTube and also the tutorial page. They're long um, and they take a long time to go through, but they are good, and it's really a good system that does work. So here's the weekly British pound US dollar. And if you look at this, you start to see um, these down candles before an up move. And then here you see the last up candle before a down move on weeks. Doesn't look like much. And then here you have a down candle before 3 weeks of up move. And now we've just experienced 3 weeks down in the British pound cable. What I do, I take these order blocks. This is the main thing that he teaches. This is a recent thing that he just started teaching not too long ago. So if we take this weekly order block here, I do weekly in green, so that way I know what my levels are without even having to think about it. So you start with a weekly chart and you get levels. The body of the candle is the most important. So this is the last up candle before the down move. So if you're smart money, a big bank that's a worldwide bank, you have decided to sell in this candle. So you've got all this range on the week, and as we go to the day, it starts to be a little bit more dialed in, and especially on the 4-hour. So if I draw from the wick, I have this weekly zone in this area here that are good areas for retracement. Also, you can go up to the top of the candle here, which is the top. These open, high, low closes on the candles are the most important levels. The weeklies, and then the dailies, and then the 4-hours. So if we went over to this one, which was the other bearish order block, the last up candle before the down move for 2 weeks. We'll highlight that area. Then we'll also highlight this area here, which we went through. But the main thing we're looking at now is this level here, this level, and this level. So you can see today's, this week's low keyed off of that 29.16 line and rejected off of it. So if we go to the daily, we'll start to see the daily daily range respect some of these levels on certain days and reject and create lows of day, key swing highs, swing lows. But the main thing that this does that is so cool is that it gives you levels ahead of time before the market ever does this. So if we mark this one as a daily level, we'll turn this one to light blue. So that way your eyes, you know, you can use whatever colors you like. It doesn't matter. It just gives you signals, and you know what kind of signal it is. The weekly would be a stronger signal, the daily would be a next stronger, and then the 4 hour. So if we go over and we draw this one, and all we're drawing is the last up candle before the down move. And you can see this was a very strong down move in the beginning of August. You can see over here that these levels started getting respected on this down move. So let's look at the up day on Thursday and what may have been the clue to that. And what I'm looking at here is this candle here. It's not the last candle before the up move, but it's the main body of this consolidation, which was the end of July. So if we take this level, or even this level over here, you can see that's a key area. Also this one right here. This is the last down candle before an up move. So if you start getting respect in this area, this is called a breaker. So you would look for areas here for retracement, and then you would look here as resistance. You can see here on the daily that it's lining up with the weeklies. This is a bullish order block. This was the last bit of buying before a multi-day uptrend. I know it's starting to get messy now, but you start to see the power of this, especially when you're looking for highs of day. Remember, we're on the daily candle right now, and you can see in this area here, and then also in this area here, that we had some areas that gave good signals for the daily high. And if we looked for this one here, we would go over into this candle. Didn't quite get there, or we could use this candle. We start to build a zone on this down side here. But let's stay within the last couple of weeks and look at what's happening in this area to anticipate this down move. So what we look at is this candle. Breaker candle here. The breaker is the inverse of the order block, the bearish order block, which is the last up candle before the down move. So you can see we respected off of that. Almost 29.16, the low of the week, our low of the day today was 29.14. So it went by it by 2/1000ths of a the pip is 1/1000th. And the way I trade in micro lots, you have one micro lot, which is $1 per pip. So you get your risk down. The main thing about risk is you only want to risk 1% of your trading account. And I try to risk half of that, which is 0.5% for that risk. So if I'm risking $30 to $50 to $60, I'm trying to make at least 50, 60, 70, 80, depending on the way the market's moving. The way the British pound has been moving in the last few weeks is anywhere from 60 to 120 to 130 pips per day is the average daily range. So if you can get a third of that or half of that for a day's trade, those are excellent results. You're not hitting home runs. You're not going to be rich with a Ferrari in 2 weeks or 2 years. You have to grind it out and just get what you're looking for. So let's go down to the 4 hour. Now you can really start to see how these daily and weekly order blocks and levels off of these candles, specific candles, start to give you really good information on the 4 hour chart. Look at this area here. This was last Friday before the Fed. This red line is option expiration. I don't know how much option expiration has to do with Forex, but it has something to do with futures. And I'm wondering if this was Fed, this big move down, if this was Fed or if this was option expiration. But it looks like this was the signal before the down move. So now if we go over and we take a look at the 4 hour, color it purple, start to see we got a zone in here in this area. Also, if we do a 4 hour here, the bodies are more stronger than the wicks. The bottom of the wicks are not that big of a deal. If we look at this one, we didn't really get a signal on the 4 hour, but we did on the daily for the high of day. And I took this trade going up to this area to run stops. The main thing in Forex is it's just a stop hunter. Dollars are not backed by gold anymore since Richard Nixon, and basically the only thing that causes liquidity is when new money is printed, quantitative easing, or when rates change and make tightening of money. They make up zeros, and people trade zeros around the world in trillions of dollars every day on Forex. So now if we go down to the 1 hour, so you can see how our daily order block there it goes through a little bit, and usually it'll go through anywhere from 10 to 20 pips. ICT teaches anywhere from 10 to 20 pips for a stop run, and you'll see this happen all the time. Every day of some sort, a stop run will be on a daily low, a weekly, And if it's a reversal, it'll run the stops and go right back the other direction. So if we look at this down move on the hourly chart, we're going to start to see hourly order blocks and hourly breakers that give really good information as far as a day trade. I keep the hourly chart up and I look at all four at the same time. It's not this congested. The only reason I drew all this is to show you what the internal daily ranges do and how you can see the small swings within a day of an hour or 4 hour or 15 minutes starts to respect these levels unbelievably. And it gives you really heads up on where to enter and also where to exit your trade as well as trail your stop. The key thing to all this, and you'll still mess up, you'll still second guess yourself. My thing I've been doing, I don't know if you play golf, but I do a mulligan. And I draw a line or I draw an arrow or I draw a circle to say, okay, I entered short right here. And then I watch it and watch it and watch it. And usually my first impression is not very good. My entry is in a wrong location. And then I also enter small. I only use 10, which is a micro lot, 10,000 versus 100,000, which is a standard lot on the Forex. Okay, cool. So you know what a mulligan is. You didn't get to use that much in the Division 1. So this is the hour chart, and you start to really see how these daily lows and these swing highs and lows are starting to be managed by these higher time frame order blocks. Do you need all these lines on the chart? Nope, you sure don't. But it sure really gives you reference lines. Can you trade off of them blind? I don't. I usually let them go up there and respond and reject, and then create smaller order blocks either on the hour or the 15-minute. So let's go down to a 15-minute. So let's just take this week. So this starts on Sunday, and Sunday around 6 o'clock. The Forex markets open. They're open 24/7, and the only time they're closed is after Friday. And also you can see that we're closed right now. So these are daily. The blue and the green are weeklies. This is not exactly the way ICT does it, but this is a system that works for me. So on the 15-minute, this is the trade I took yesterday. I was watching this area here, and then it went up and ran the stops and then stopped at 13.19, and the high of the day was $31.20. So not 13, 31.20, and the high that we're showing here was 31.19. So one pip, which is 4 decimal places, or 1/1000th. And start to respect how close that is coming from daily and weekly levels. And will you always be right? Will you not lose money? No, you won't. This right here started in Asia. This move lower today started in the Asian session, which is really not very likely. But you can see the banks were on a mission today to get the British pound lower and to run these stops. When you get equal lows like this is called too clean. ICT calls it too clean. So if we draw we know below this area for 10 to 20 pips that this is going to be a stop run area. Looks like they went further than that. 29.46 is around this level, and it went all the way down to 29.14. So about 30 pips on that one, which is not uncommon, but the British pound is under pressure because of Brexit and what happened with the vote on Brexit. The key thing to look at in these areas is like this one right in here. Just narrow in. This was a stop run on the bigger time frame, the 4-hour time frame. They ran stops, and then Thursday was the end of the high of the week, and then it goes down on Friday. The key thing about Forex is there's institutional levels. We saw it a little bit on crude, but you really see it on Forex. And institutional levels are 0, which is like 1300, and then you also have 20, which you see here. 302 would be your 20 level. Your next level is 3050, 1.3050, and that's your mid level. And then you have 1308, which is the 80 level, and then you go back to the 00 level. These institutional levels are key every day of some sort. It will play off the 20, it'll play off the 50, it'll play off the 80. And if you look at that in that range inside there, you've got 20 to 30 pips, and those pips are stop runs, and it allows them to maneuver around and take little guys out like me who don't put stops bigger than 30 or 20 pips. So if we take a look at this one, this is where it came up, and I exited it at 18 on this, and I ran up here. I had 4 on, and that made, I think, around $130, $140, just this little area right here. So it doesn't take much. It takes a lot of patience not to overtrade. That's why I do the mulligans and the drawing. So if we take this area and we do a 15-minute order block, we didn't quite get there. Make it a different color so it's not the same. Different color so you can see it a little better. So this is the first signal. This was going into the end of day yesterday, Thursday, and you can start to see the 15-minute order blocks are starting to have impact on these lower levels. So this would be one, and the bodies are sufficient on these 15 minutes. If we go to this one, if we go over, this is the breaker here. So this is the last bullish candle before the up move. These are really small swings, but you can see it sort of frames out the high of today. Sorry, I'm on the phone. Hello? Hello? Okay, the phone call hung up. And then we go over to this one. Really no signal there. And then we've got this one. This is an excellent signal. Now this is later in the day. You could trade this after you wake up, or it's 4 o'clock, so it'd be 3 o'clock for you guys. I think you're in Chicago, if I remember properly. But this is a really good move. You've got almost from 20 to 91, 29.14. So you've got from 302 to all the way down to 29.14. That's a really good move. You don't have to get up at the crack of dawn. Okay, you're in Eastern time. Okay, but it's good to let the move start. ICT calls it the second mouse gets the cheese, the first mouse gets killed. The second mouse gets to come along and eat the cheese around the dead body of the first mouse. So those things are crucial. As we get down into these 15 minutes, especially the 5-minute chart, you start to see that the order blocks are not as important, but the level of consolidation is more important. So if we go down into this area, let me show you this is my hourly chart. This is the way I look at it. Let's save our drawings. Type something. No, we don't fade the trend. We go with the major trend. The pound dollar, the cable is definitely on a downtrend since Brexit. We had that little move up on Thursday to run stops, but all it was to run stops and get the high of the week. We're always going with the major trend. So if I bring up what my hourly charts look like. I know this may not seem like anything beneficial, but you just have to put some time in. I've been doing Forex now for 2 years, and it's starting to be second nature on cable. I can see it real time. I can see what's going on. So if we go on the 1 hour here, these green lines are weekly. This is the weekly high and low from this week. And then the yellow lines are the daily highs and lows. And I think you could trade just off of these. Would you get a lot of trades? Probably not, but it definitely shows you things that are key. When you see these big candles on the hourly chart, this is institutional buying. This is an institutional move. When you see this consolidation, these little lines lead to big lines. So you can see They were buying, ran stops. What did they do? They come back and they crush the people who were right before the big move goes. So this was on a Wednesday, and then Thursday took off. And we took off and we started building a really uh, head and shoulders scenario here. Then on the opposite side, you start to see these levels come into play on the downside. So you can see this one right here. And all they're doing now is pairing orders. Sometimes they were selling here, and you're talking institutions now, you're not talking individuals. They were selling here, they were selling here, they were selling here. So when this thing really starts to run on the other side before the Fed meeting, you can see how grinds up, slams down, grinds up, slams down, grinds up, slams down. Same thing here. And what they do, they're running stops. They ran these stops. Here's the daily high. This is one thing I was looking at for that trade yesterday, was to run these stops. Everyone expects it here. Everyone thinks this is too clean down here, and they're going to run it here. But what do? They need a better buying environment. They need a better entry on their shorts. So what do? They come up here and they look for liquidity above this area right here. And liquidity is what makes Forex work, because they want the best price and they want the most amount of orders that are at their disposal to get large positions on. So they could have been selling short here, up here, and it didn't come up. I was expecting it to come up to here, into this area over here. But if you look backwards, and I do this a lot, okay, wrong thing here. We look backward on a swing high, really start to see where these order blocks are coming in place. So you can see we were at the top of this consolidation area before the big move up. So when they came up, this 3120 lined up with the tops of these before the breakout up here. So they run up here, they run these stops, go all the way up, they run this stop area here, and then what do they do now? Now they're starting to run stops to the downside. These big areas here, when there's not much trading on these fast slam downs like here, this is called a liquidity void, LV. You'll see it in ICT's videos. And I don't claim to have invented any of this. I put a little bit of a twist on there that is mine, but he's to give him credit. And when you watch his videos, you'll see all this stuff, but this is sort of the cliff notes for it. So really, I was expecting this area or this area right here. We didn't quite get there, but we did come to the top of this consolidation area. So we're still on the 1 hour, and then we ran these two clean of stops right here. You can see the two yellow lines. This is the beauty of Thinkorswim. They give you these daily highs and lows as a study, and I just changed the weekly one as a green. And you can sort of see we were consolidating here before they ran the stops up to here. I expected this stop to get ran and this one, and possibly come up into this area or to this area, but we didn't get there. And then it was a surprise for me that Asia sold off. But you had areas to get in. So let's go look at the 15. Go back to our drawings. My charts aren't this messy, but you can sort of see how this sets. So let's go to last Friday. Here's our daily level that marked it almost to the pip, and then here's our 4-hour mark. That's our 15-minute mark. I get up at 1:30 Eastern, and then the European markets opens at 2. So I'm watching at 2. I do all my homework prior to the opening at 2. But 3 o'clock to 4 o'clock is what's called the London and the London Open. And usually the high of day will be made around London, or low of day will be made around London. And ICT talks about those areas as kill zones. So you can sort of get an idea. There'll usually be a major move, which sometimes is a false breakout to run stops. He calls it a Judas swing. And then also you may have just a barn burner day that just goes and doesn't look back, which is pretty much what we had today. It wasn't extremely strong, but it was strong enough after this stop run right here. So if we look at this level here, we're at 30.90. We went up to 31.20, so we had a 30 pip stop run above this level right here. You can still see we're coming off a major downtrend that's been going now for quite a few days. And this was just to go up, look for liquidity above this area, get a little bit into the we look at this order block right here. What I'll do is just change the date so it goes out. Talking to someone on the phone, okay? My wife just got home. So you can see this little order block, this little 15-minute, which was a jog on Friday that doesn't look like much. You're going to see that show up today. Or yesterday. That was that 20 area. I was watching that. That was one of the main reasons I exited on this stop run. So I went counter trend, Bob and Sandra, on this one because I expected these stops to get run on this day. And you can see this daily high. Okay, no problem. It's the weekend. But I just, you'll get this in the video. You won't get this short of a form. It does take a long time to go through all his material. But the order block is the key. The breaker is the key. Yeah, if you want to get up in the morning, we can We can Google Hangout and talk. It would be hard for me to trade and do this as a video presentation. It would be a little bit hard for that. But you can see all these clues are here every day. They're showing up on the 15. Now if we go down to the 5, you can see the 5-minute has the same type of order block as well. You can see this daily low right here. This was a key level. I watched this. I didn't trade it, and I was thinking about trading it. I was waiting for a pullback. And this is where everyone says in teaching, you're waiting for a pullback on a major trend, but they don't tell you why that's going to come to that area or where it's going to come to there. The order block levels show you why it's coming back to that level. The green and the blue are the most important. I typically don't do purple. I sort of eyeball those, the 4-hour ones. Even this one right here wasn't that well indicated. And then on TOS, the cool thing is they have tick charts. And ticks really give you the real move of what's happening instead of time charts. You don't use order blocks on that, but you use it as zones. So you can see this area here at 544 was perfect for an entry short. And you would have got a good portion of the move of the day at a reasonable time to get up. So what's ever happening, let me show you this drawing before we hang up. This is the homework screen. This is that opening range from midnight if you go on a 15-minute candle. Midnight opening price is this light blue line, and then you have the high, which is the midnight candle, and then the 15-minute candle, which goes into the 30-minute candle. So the high and low is plotted and the opening price is plotted. And usually you'll see like this little, what's called a Judas swing or a pop up to check for stops. And they pop it up again. But once it starts getting below this opening range at midnight, New York time, you start to see a pattern. So here was the first volley across the bow, and then it comes back up into this daily low. We've got daily order block, and then this one's perfect. So if we go into a 15-minute here, that's a really good signal that we didn't come too far up into this candle. He looks at 50% of candles. If it goes past 50%, sometimes it may go back up here and run. But on a big downtrend day today, it was this was probably the best signal, and that was right around 5:45. It got a really good move all the way down. You could see this one didn't come into an order block at all. If we pop out on the tick chart, you see it really clear. This is excellent. You see the daily resist, the daily low resist, this bold yellow line. You can see it over here on the side, and then it comes back up into the order blocks, the daily here, 15-minute, and that would have been your signal short right there. Will you do it perfectly real time? Probably not. But it definitely organizes you. It definitely is giving me an edge. It definitely lets me know when to get out when the trade is not correct, and it lets me know when to take profits or start scaling out. If I've got 3 micro lots on Then I start scaling out. I'll take off 2, let 1 run. Or if I have 4 running, I'll take off 3 or 2 and let 2 run or let 1 run. And it just gives you a chance to lock in profits. So I won't take up any more of your time. I just wanted to give you sort of a taste. These are the cliff notes. It's not comprehensive at all. You won't understand it all. But I'll post this, and or I'll leave it on, take notes or whatever. But it's powerful stuff. It gives you levels like nothing else does. Have a great day. Thanks for your time. Thanks for jumping on here with me. Have a great weekend.